All right, let's start with your word of the day. It's scary. What's scary right now?
Not Halloween. That's nothing to do with Halloween. What's scary is how well U.S. companies have done in the face of all these headwinds this year, whether it's the tariffs, stickier inflation, U.S.-China tension. So we've really plowed through a lot of headwinds. The economy continues to expand. So it's scary how much this economy has a mind of its own. Earnings are coming in better than expected. So anyone who was afraid and off to the sidelines has missed one of the biggest rallies since the April 8th lows. Think of it that way.
All right. Just want to talk to you in general about some of the news we're getting out of Riyadh this morning. A lot of people call it the Davos in the desert. One voice we heard from is BlackRock's Larry Fink. He says that major U.S. investors are overweight U.S. equities. He believes that's the place to be for the next year and a half or so. Do you agree with that take?
I do, Frank, in the sense that your core portfolio holdings, right? The core should be in and around the United States. Everything else is kind of an overlay. So when you look at technology, you look at energy, you look at entertainment, manufacturing services, a lot of roads lead still to the United States. So we're still producing a lot better than expected earnings momentum, better than expected growth, and I think that's going to continue. We think we're in the early innings of an uptrend here in the United States, economic growth, earnings momentum that carries forward into 2026. So you want to be invested here at home.
All right. One thing you're looking at is tariffs. Now, we heard from the head of the IMF. She believes that trade uncertainty is at an all-time high. At the same time, we have the president in Asia striking the framework of some deals, which are kind of big on fanfare but light on details, and also has a meeting with Xi Jinping coming up. How are you viewing tariffs and the risk to the market and also to the Fed's plans? It seems like they have plans to cut. Could tariffs derail that? Could it derail the rally we're seeing?
I really don't think so, Frank, because the tariffs are being offset, mitigated by other variables, whether the companies are eating the costs or passing some on to the consumers. So I think that's going to continue. So, the tariff trade has actually faded over the last couple of months. It's still out there. Retailers, appliances, automobiles, it's sector specific. But in general, I don't think it's going to complicate the Fed to continue to cut into 2026. We're still looking for rate cuts next year.
Joe, stand by. I want to point out futures are higher. We just got a big earnings report that seems to be moving the Dow higher right now. That's United Health. Their earnings are out. The company beating by 13 cents on an adjusted basis, with revenue coming in at $113.2 billion. That was just ahead of estimates. United Health also raising its full-year earnings outlook. Taking a look at shares right now, they're up just about 2%, well, 1 3/4% in the pre-market. But again, moving higher after earnings, with the company beat on EPS and had revenues that were pretty close to in line. Again, UNH shares up about 1 3/4%. Joe, coming back over to you. I want to get your take on this UNH report. Healthcare, it's been kind of a struggling sector this year. This is obviously a very important report, not only for the sector, but for this company in particular.
Yeah, healthcare, Frank, some great high-quality companies, good dividend payers, so it should be part of your portfolio. And what they just reported is emblematic of better-than-expected earnings. I think that's going to be the theme for Q3 earnings, so not surprised there at all.
All right, your pick first today, consumer discretionary. Very quickly, guys, give me one sentence. Why consumer discretionary? Why not one of the cyclicals with the idea we're getting a rate cut?
Because the U.S. consumer continues to power ahead. There's going to be very good, strong holiday spending. And already we're talking to clients that are booking vacations and all their plans for next year. So we've got a lot. We've got the soccer World Cup. We've got the 250th anniversary U.S.
Okay.
There's a lot of upside to a lot of consumer discretionary stocks.